Okay, guys, just gone to market on a quick scalp for Justin in the group. Salute to you. So let me flick this over because it's literally just triggered. I'll kind of explain a little bit about what I'm doing. Now, anybody who follows me knows I kind of watch what's going on in here with the guys. I do it all the time. And I'm doing this for Justin, so it's a little salute to you because you're looking at pound JPY this morning. So I did a video roughly what it is that I'd be looking at, etc., etc. Now I've been tracking it through, actually on events. There is a Scruffy event on June the 22nd. That's going to be in Darlington, the Northeast, where we'll all get together and we'll talk to you live. There's only 2 or 3 seats left now, so if you're interested, drop Joanne an email and she'll give you details. But anyway, cut this over onto here. What I've been doing is I've been tracking this. Now that's what's gone in, so they know exactly what I'm doing at the time. Okay. What it's come back is you've got to be a bit careful with it, but it's telling you to scalp. Medium TP, so that's about 15 pips. I'll be downgrading that because the target is really just to give you a guide as to what you're doing. Now it's slightly underwater at the moment. I'll come back to that sheet in a moment. But essentially the essence of the trade is I always go from a level to a level. Now it's here at 12 pips, so I'm going to pull that back to 10. Okay, just like so. And the idea is for it to push through. Now, the idea of getting into the trade was above this candle here. Okay. So if I was counting back, 1, 2, 3, 4, 5. There's the optimum point. Got the baseline here. Put the order above it. Come in, spreads, triggered it. It's pulling back a little bit, but the chances of it pushing up into there is reasonable. Okay. Now, when I look at this entire chart, one of the reasons you've got to be careful with it is if this decides to pull right back on itself, it's coming back here somewhere. Now, I do get the comments all the time. Hey, you don't put your stops in. Where's your stops? Well, that's where your money's made, and it's done in the management of trading, and that I keep for the guys in the squad. It's that simple. Okay. Now, I know people are not going to like that, but at the same time, stops only have one job, you know, so it's irrelevant where I put my stop. I can put it down here. I can put it right underneath the candle that I'm trading. It doesn't matter as long as I agree to it. Now, I trade my way. It suits me down to the ground. You trade your way. Suits you down to the ground. The only sort of yardstick is whether or not you've made money on a Friday afternoon. And more often than not, I do. And you'll see that if you've ever had the opportunity to go through the channel, go through the Vanguard series, and you'll see it. Because not only do I show the statement in those sort of things, what I'm doing, I also show you the real bank account and it coming out of the broker into that bank account. Now, I can't be any fairer than that. So I'm damned if I do and I'm damned if I don't. So when I get those comments like that, I just kind of ignore them because it ultimately has got nothing to do with you, how much I earn and how I trade. I'm just showing you what I do as a hobby. I hope that makes sense because funny enough, I'm going to kind of give a little salute to Tin Pot Trader because I was having a bit chat with him in the comments on the last video and he hit the nail on the head. I totally agree with you, kid. Totally agree with you. But anyway, let's look at this. Let's just talk about trading in while this is playing out. Most people fail because they gamble, period. Now, the other ones who fail are because they're uneducated. But you put an uneducated gambler together, whoa, that's a recipe for disaster. And they will always kick off. Always kick off. And do you know why? Because they're the type of person that will blame everybody but themselves. Instead of looking at what they're doing and sort of analysing, what they've done is they've thought, right, I've got a computer, I've got a chart, I've got this super system because I thought on the internet, and it obviously worked because the guy was driving a Lamborghini. Fuck's sake. No. You know, if you're doing this as a job, the money side of it has nothing to do with it. It's the process. The difference between a rich trader and a poor trader is the size of the account. But both of them could be very good traders. Okay. You can earn a good living, but it takes years to build up your account. It takes money to make money. Okay. So if you're following a process and you're not gambling, well, it's quite simple. You target appropriately, and that's from a bounce point to a bounce point. And that's exactly what you're looking at this moment in time. The levels that I use, I need them. If I haven't got my levels, I am screwed, because they are the only things that protrude into the future and are static. So an indicator will never tell you what a future price is. It can't, because it's based on retrospective data and it's changeable. It's a variable. Now, there are two constants on this chart. One is the price and the other is the level. The price, if I look at a minute chart or a monthly chart, is in exactly the same place. If I look at a minute chart or a monthly chart, those levels are in exactly the same place. But if I put an RSI on this, just as an example, it will have a completely different setting on the hour to a monthly. So they are variable. So therefore, it's an unknown. Now, the one thing I do know is history repeats itself, but it repeats itself from constants. So the price will stall at a given point on the chart over and over again. And that's what these are. So I know if I'm going from there, there's a high probability it's going to bounce in and around this area. Well, that's exactly what's happening right now. And again, when you look at these things and you look for compressions, there you go. So down here, for argument's sake, this is quite a stretch of chart. All across them hours, you could be a buyer or a seller just using the levels and you'd have made money. Now, if you put your ducks in a row to a given direction, well, in that case, you have a very high probability of getting it right. So if I said to anybody, is that going up or down? You'll say it's going up. So as long as you're prepared to keep going up because the market says so, that means you can take advantage of a pullback and get a greater return, even just going to there. Now, I get that as well. And they go, oh, well, you lose a fortune if it all goes tits up. Well, if it goes tits up, it goes tits up. But I've agreed to it. That's the kicker. I've agreed to that trade. But as I stage backwards, it's going to hit bounce points. Comes down, bounces back up. You know, if I was selling here, right, in the face of a buying market, but I averaged up, well, there, gets me out of trouble. Averaged all the way up to there, come back down, got me out of trouble. This one would be really naughty, but that came about halfway back into it. It would get me out of trouble. So my losses are actually a hell of a lot less than what you think they are. All you see is the big drops and being wiped out. And that's because that's how you operate your account. You're too zoomed into the chart and it'll annihilate you. But if you were averaged in, you reduce your exposure, but you also increase your upside. But that is a complement to a current trade idea. That's the kicker. I know I'm going long, so I'm happy to average short because then it'll come up higher, make more money. So as long as I've got that direction right, forgives a bad entry. And most of the time I do. And that's where this thing comes into play. Because for all I can do it in my head, this works it out for me. And it works it out in such a way that it tells me when to stay in the market, when to be out the market. I've got a gauge of strength that I can work on. That's personal to me. I work that out myself. But if you go to Finviz, investing.com, there's loads of heat maps that'll tell you what strength is. Then I use journals, which tells me exactly how much I'm willing to put on the table, works out my position sizes for me, all sorts. So all of this I do before I go to market. I don't just switch the machine on and go, well, I'm here. Give us a trade. But I bet you do. And then I bet you also, you wouldn't dream of looking at that chart, getting a big picture view of what the weekly's doing, getting an understanding of the market to trade a 5-minute chart. Not many people will do that. But if you do, and you do multi-time frame, get a good gauge of what the market's up to, what you can see, because here, strong drive, came down into the pivot, failed the pivot, is held above the pivot. There's more pressure to the upside than there is the downside. And that's the big picture. So if you're going to hold the trade for a while, you're in with a winner. You can do a similar thing here. This one, it's slammed down. Excellent. Where's it going? It's going back to the pivot. It's trading into the pivot. So for all the two different types of way of looking at the chart, they're both telling you the same thing, that this thing is buying. Take it into 4 hours. You can see it even in greater detail. Again, there's a range. It's broke out the range, pushing. Where's it going to go? Well, the first point of call is going to be obviously these levels here that are all marked in. But over a period of a day, maybe into the early part of next week, it could easily get up to here if it continues that trend. But as a day trader, you want to be neutral and see what's happening in the moment. And in the moment, it's sort of struggling in and around these levels. It's trying to push up, and I'm scalping on the intention that, one, it's Friday morning. Don't want to be trading the Friday afternoon. I like to be finished by 11 o'clock. And the only trade available to me is that to that. And it's a safe, easy trade. Now, if I get trapped in it and I have to average, I already know it's going to bounce around this area. And again, I can get out of trouble because the bigger picture is telling me this is a buy. And then all I need to do, take it down into 15 minutes and have a little look at it. What have we got? Well, shockity shock shocks. There's a strong directional drive, which is there. It's come down, hit the pivot, bounced off it, failed it. It's gone back up to where it came from, which is one of the main rules of fib, which will be to here. But we've got this worry line there that I know can bounce price. So again, adds weight, down to the pivot, failed the pivot, gone back to the 38, pushing through that, and it's gone straight up onto that 23 as a failure point. And I'm banking on it breaking through there to get up onto that. And that's your trade idea. All nicely laid out, thought out. And if I get 50 quid off it, brilliant. Now, for the counter trenders, they'll be going, oh, well, that's going down on a 5-minute chart. This is a blink in the eye compared to the big chart. And if it's wrong, well, it's wrong. Simple as that. You know. But I know between that red line and that black line, this price is going to bounce up and down. So all I have to do is capitalize on that. And my version of where it's going is, I believe that it's going to be a scalp to the upper side. Let's play it out and see if it works. Okay, boys and girls. You never shut up, you, do you?
Sorry, I'm just telling you about cash point not working.
She's having a disaster, boys and girls. Cash point ain't working, so she can't go on the sunbed.
No, it wasn't that. It nearly took me car out to pull it back out.
Well,
That would have been a disaster.
Not for me, it wouldn't have been bloody amazing. Right, boys and girls. I'm getting ready to pull the plug on this because it is now bouncing around this level. We well in excess of the £50 that I was after. So all I need to do, oh, it's dropping back, bollocks. See, if you hadn't opened your gob, I'd have been out by now.
Sorry.
Don't worry, you can pay it back in kind later. Right, as soon as this gets back up to 46, 41 quid for us at this moment in time, there's a number of ways you can do this. You can pull your targets in and let it bounce out itself, like so. So as soon as it gets to the top of that, but it's struggling in and around this. Or you can do what I'm going to do because it's back at the level, is look to see it all and just go crack. Close it all in one go. Bash. There you are. You're out. Now, the reason why I've done that is quite simple. It's Friday morning. This has now been running approximately an hour, you know, coming up to, well, I'm saying now, when did I get in? Maybe it's 20 to 10, something like that. Anyway, thick end of an hour. It pushed under a key level, which meant that, okay, I'm going to start averaging into this to manage the trade. Because if I'd gone 100% at this point, I'd have to manage it all the way down here in heat, can't do anything, wait for it to come all the way back up to around here where I got in, so I still would have been underwater at this point, and sweating, and luckily get out with maybe a quid. However, because I've averaged into it and then come back to this, not even the same place, what I've been able to do is, all right, I've got a red mark. I'm not bothered about that. Only gamblers worry about that. I'm bothered about what the net total is. And the net total was positive, which is there. So 15 from the 73 gives me a profit. I'm quite happy. And I do that over and over. So I don't care about these. And it's all hinged on one thing. One, homework. I did all the homework first. And as like I said it somewhere in the video, as long as I get that direction right, it'll forgive the bad entry. And that's it. That's trading. So when you twist about the way I trade, to be honest, most of you don't actually know how I trade. You just see something that you try to replicate. And you're doing it from not knowing how I was doing it in the first place. If that makes sense. So basically, I do it my way, is what I'm saying. I'm a big advocate of managing trades and working on trades. And I look for what's called net positive all the time. Whereas a lot of the gamblers out there, they can't bear to see a red mark. So they're obsessed with the stop. The stop's irrelevant. Doesn't make any difference. Your target is irrelevant. Doesn't make any difference. You know, they're just a small part of the cog. So what you got to do is you look at your direction. Is it going up or is it down? Right, it's going up. Where's a good place to get in? Here. Right. How much will it cost if it goes wrong? Well, it's going to be X amount. Do I agree with it? Yes or no? If it's no, don't take a trade. If it's yes, fine. And if it punches you in the nose, at least you agreed to it. But trust me, I'd rather have a slap in the face than a kick in the bollocks. I really would. So these are the questions I ask myself before I go to market. So as long as I know where my exit point is, which is beyond a level, do I agree to the cost if it goes completely tits up? Yeah. How can I manage it? Well, I average into it. And then what I get out on the other end, as long as that's worth my while, I'm happy. ROI, return on investment. So there we go. But if you like the videos, do support it. Hit the thumbs up, subscribe, helps support me and sort of makes me want to do more of this. And if you don't, well, I hope you've enjoyed the video and best of luck on your journey. But as always, guys, do what you love and the money will follow. See you all in the next one.